Today, Bitcoin and Ether are in the red yet again. BlackRock tweaks one of its money market funds to be Genius Act compliant. And David Bailey, CEO of BTC Inc. and Kindly MD, discusses the recent acquisition of his Bitcoin investment company, Nakamoto Holdings. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Digital currencies spending another day in the red as uncertainty continues to hamper markets. By noon Eastern, Bitcoin dropped to the $108,000 level. Ether traded just above $3,900. And Ripple's native token XRP fell to $2.36, even after the company announced a $1 billion acquisition of treasury management firm GT Treasury. The move aims to bring Ripple's blockchain infrastructure to corporate finance. Okay, let's talk about the top stories. Paxos, the stablecoin issuer for PayPal, accidentally minted $300 trillion worth of PYUSD due to a, quote, technical error. Paxos accidentally minted the tokens during an internal transfer, but the company said in a social media statement that it immediately identified the error and burned the excess PYUSD. It also insisted that there was no security breach and that customer funds were safe. Now, just for some context, there aren't enough dollars in the world to back $300 trillion in PYUSD. Theoretically, that's more than double the estimated global GDP. For more on this story, you can head over to CNBC.com. And sticking with stablecoins, BlackRock is reconfiguring one of its money market funds to serve those interested in dollar-pegged tokens. The BlackRock Select Treasury-based liquidity fund is an investment product that has all of its assets in cash and treasury instruments. Well, just today, the investment giant retooled the fund to be compliant with the Genius Act, the stablecoin regulations passed into law back in July. Now, this change means the fund can serve as a reserve asset for stablecoin issuers. Of course, crypto adoption has been a growing priority for the business. While on CNBC this week, BlackRock's CEO Larry Fink once again pointed to tokenization as another major priority for the asset manager. And finally, Kraken just acquired a derivatives exchange. The crypto trading platform announced today that it's buying Small Exchange, a CFTC-licensed designated contract market, which means it lists futures and options contracts. Kraken's paying $100 million to buy the firm from financial services company IG Group. According to the announcement, the acquisition expands Kraken's global trading infrastructure and paves the way for a fully U.S. native derivatives venue. All right, for our main story, I sat down with David Bailey, the CEO of BTC Inc., the company which in part organizes Bitcoin conferences around the world. He's also the CEO of healthcare company Kindly MD, which merged with Nakamoto Holdings, the Bitcoin investment company founded by Bailey. We talked all about that merger, the digital asset treasury trend, and regulatory advancements for crypto here in the U.S. Last time you and I sat down was in Las Vegas at Bitcoin 2025, the biggest Bitcoin conference in the U.S.
It was a great time.
It was a great day. It was a great event, a lot of excitement. And interestingly enough, it was very different than prior conferences, Bitcoin conferences. I remember going back in 2020 and it was all about anti-fiat, anti-government, anti-regulation, anti-politics. And then here we were in Las Vegas and we had politicians, lawmakers, regulators, and institutions. I mean, you name it, quite a shift.
Yep.
And I want to talk to you all about that in just a bit. But first, we have to talk about the digital asset treasury strategies because we're seeing so many of them pop up.
Yep.
You just completed a merger over the summer.
Yep.
Kindly MD and Nakamoto Holdings are now one.
Yep.
Absolutely. And Nakamoto Holdings is a digital asset treasury focused on Bitcoin, Kindly MD, a healthcare company. So where does all of that stand right now, given it's been a few months since all of this was completed?
I think you got to kind of take a step back to look at the digital asset treasuries as a whole. Mm-hmm. The entire space is roughly 18 months old outside of MicroStrategy, so it's very young. I would say we've gone through periods of, euphoria probably 6 months ago when all of these were launching. And right now we're seeing the market correct and really scrutinize these plays and dig deeper into the businesses, which I think is appropriate. I mean, anytime there's euphoria in the market, you see, good companies come to bear, and you also see not great companies come to bear. So the market's getting more sophisticated. It's learning how to assess what makes these treasury companies different between each other. I think the big takeaway is, there's only so many companies that the market can bear doing the exact same thing. So the market wants to see differentiation in the strategies across these. This is what we want to see as investors. I mean, we've backed over 15 of these treasury companies. And unless you're doing something that is completely unique, it's like kind of what's the edge? Why are you needed? And so you can be unique because you're targeting a unique international market where there's nothing else like it. You can be unique because you're focusing on a certain asset category. For example, Michael Saylor is very focused right now on breaking into the credit market and with his preferreds. You can be focused on, rolling up operating businesses that generate income. So there's a variety of different ways that these companies can, build operating leverage in the business and grow the amount of Bitcoin that they have on their balance sheet. But the days of just saying, hey, we're going to copy what MicroStrategy's done and do the exact same thing, there's going to be 100 of us, that's just not viable. So I think right now we're going to see who emerges of all of the different treasury companies that have launched to the next stage. And I think that's going to put the industry in a very healthy space. So it's exciting to watch. It's all very early, very young. I mean, our company was the first, let's say, large treasury company that launched to come to market. I mean, we've been in the market for 2 months. The second one that's coming to market, maybe launched a week ago. So, even though they've raised money 6 months ago, they're just now actually listing or closing their mergers, et cetera.
And how does it all work right now? Are you still considered a healthcare company, or are you solely a digital asset treasury?
So we're still a healthcare company. We're transforming the healthcare company into a Bitcoin holding company. And that process is multi-step. And so right now we have a Bitcoin treasury. We still have our healthcare operations. We intend to merge in some Bitcoin-focused companies at the end of the year. And as we complete that process, we'll complete the rebranding and transformation of KindlyMD into a Bitcoin company.
And why was it important for you specifically to get into this whole DAT trend, if you will, especially given what I had mentioned earlier, this narrative shift that we're seeing from Bitcoin being the end-all be-all, let's invest in Bitcoin, just the token, to now seeing more adoption from institutions and TradFi. So why was it important for you to move into the space that some would say is really geared to institutions and to get more adoption?
Sure. So I think for us, this really sprung out of watching both this play out in Japan with MetaPlanet, which is a company we backed, and we got to see the power of a publicly listed vehicle, what tools that gives an operator, and then watching actually the president, President Trump, win the election. And this merger that's happening with mainstream financial assets and the TradFi capital markets with the Bitcoin capital markets. You started the segment, mentioning like the conference has changed. What we like to say is it's not Wall Street that's changing Bitcoin. It's Bitcoin that is co-opting Wall Street. And the Bitcoin software is the same software today as it was last year, as it was 5 years ago, as it was 10 years ago. The only thing that's changed is the size and significance of the asset has gotten so big that the rest of the financial world has to reckon with it. And so that integration merger is happening. We saw an opportunity to help lead that charge from the perspective for Bitcoin. And our goal is to see Bitcoin become the reserve asset of the world. And so that means that there's going to be a day where almost everyone on the planet has exposure to Bitcoin. Every company on the planet has exposure to Bitcoin. That process is just beginning. And, it's very exciting. So where else could we be? We want to be on the front lines of that.
So let's expand on that. Why do you think we're seeing all this interest from TradFi specifically now? Is it all the regulatory advancements we're seeing on Capitol Hill as it relates to crypto? I mean, we are hearing from JP Morgan CEO Jamie Dimon, a well-known crypto skeptic, and now all of a sudden he's saying that he's somewhat embracing Bitcoin and he's open to moving to the stablecoin space. JP Morgan's creating a deposit token. So what do moves like that signal to you?
So definitely government regulation clears the way for these companies to come and be able to engage with the industry and build their own products and businesses. At the end of the day, what's driving it is just incentives. Institutions, investors, they follow the money. And Bitcoin is the best performing asset of all time. It's the best performing asset basically for any year since it's launched, maybe other than 2 or 3 years that it was not the best performing asset. And so these investors, they don't want to be shut out to this market, and that's where they're going. In the broader macro sense, why is this happening? I've heard this term, the debasement trade, but really it's people looking for an alternative to the existing politicized financial and monetary system. And the cracks in our monetary system are showing up everywhere throughout the world. And so Bitcoin really represents this opportunity to rebuild our financial system, rebuild our monetary system without the politics, and just focus on the business side. So the fundamental story is very strong. The institutions, the investors, they're following where the profits are. Bitcoin is where the action is. So I think that process is still very early. People say the institutions are here or they've come. It's still in the very, very beginning stages of that. And I think that you're going to see 100x growth over the next decade with institutional investors in Bitcoin.
Now, turning back to regulation, you have been integral in shaping the current political landscape. I mean, you were a Bitcoin advisor to President Trump during the 2024 election. You also had invited President Trump to speak at Bitcoin 2024 in Nashville. And so I'm wondering, obviously a lot has changed since you and I spoke back in May in Las Vegas for Bitcoin 2025. But we have seen a lot of regulatory advancements for crypto here in the U.S. Our first major piece of crypto legislation with the Genius Act becoming law back in July. So if you could give a report card to the president.
Oh, A++. A++.
So I take it you're happy with the movements we're seeing.
I'm thrilled, and I have so much appreciation for the president just following through on what he promised to do.
Did he take any of your advice?
He picked the best pieces of it to follow, let's say. So
I think you're being humble.
The president, he made a lot of promises to our industry. He delivered on all of them and then added more to the list. And it's been incredible to work with his team. He has an amazing team around him of just high octane executors, and they really believe in the potential of this industry for the country. And so, I'm excited to see what happens next. I mean, it took us almost 10 years to assemble the list of things the industry wanted, and it took him, 6 months to blast through that list and get most of it done. So I think there's two, major political projects that are on the horizon. One is the market structure bill, which, is a complicated bill. It's complex. It touches a lot of different industries and subgroups. And so people think that it's going to pass by the end of the year. It might actually be before the midterms next year. We'll see. And then I think there's also an appetite and demand for a Bitcoin-specific bill, both around the SBR, but also things that touch on taxes, mining in the United States. There's just a lot that the Bitcoin industry specifically needs, and I think that that's going to be something that happens over this term as well.
Now, Bailey also discussed catalysts driving Bitcoin's price right now and his global strategy as he prepares for 2 upcoming Bitcoin conferences in Amsterdam and Abu Dhabi. You'll be able to check out his full interview over at cnbc.com/crypto world. Okay, that's all for today. We'll be back again tomorrow, and we'll see you then.